Welcome back. In this lecture, we will discuss about the third component of our strategy, that is the smart money concept. So far, we have discussed about the Elliot Wave Theory. We have also seen how to see the Elliot wave on the real charts. In the last lecture, we discussed about the indicators, the couple of indicators that we would like to add with Elliot wave just to add further confirmation to our trade. And those indicators were RSI, relative strength index, and MACD, moving average, convergence, and divergence. In this lecture, we'll discuss about the third and the final component of our strategy, that is the smart money concept. I told you in the introductory class that I like to trade and I like to see what smart money wants to do rather than drawing just simply resistances and supports or drawing the patterns or think like a retail traders, because smart money or these bulls or bears or the whales that you can call, or those who are the market movers, they love to hunt the stop losses of the retail traders. That's why the win rate of retail traders is not significantly higher, because they just are trading the resistances and supports and just some random indicators. So let's discuss about the retail mentality before we move on towards the smart money mentality, so that we are clear that what we are going to discuss. Let's say the market went up, came down, went up, came down, went up, and is creating kind of this kind of stuff, something like this. Now, thinking as a retail trader, what they start to think is that this is kind of resistance and support, and they start to draw some random lines, not random, but they try to do something like this they think as a resistance. I will turn this into red, and there are other group of indicators, of course, who are thinking this as a support. If price is bouncing off this support, let me turn this into green. And whenever price goes up and touches this trend line, it drops every time. Now, let's say the price is right here. What do you think the retail trader is thinking? The retail trader who is trading based on this resistance line, he would think that the price will come up, and because this is resistance that has been established and it was respected. So a retail trader would think that once again, when the price would come here, it will be respected. Those retail traders who are trading this red line as resistance, they will take a short position. Similarly, those retail traders who are trading here as a support, they would think that the price would go, in case the price went there and the price, let's say, is moving down after rejecting this resistance. The retail traders who are trading here and thinking this as a support, because this has been respected multiple times, so they think that now this time again when the price would come here, they would expect a bounce and they would like to take a long position right here. Now, not only they will take the position, they will put their stop losses somewhere. Now, where they would like to put the stop loss? Of course, you will put stop loss somewhere here above this resistance line. Or in case you are thinking this as a support and you want to long it, where would you like to put the stop loss after taking the position? Let's say you take the entry once the price touches this green line, and of course, as a retail trader, we know that we keep our stop loss just below the resistance line. Now, these stop losses, there are millions and billions of dollars resting right here, because people shorted here, they have stop losses there, people shorted here, they have stop losses there. So retail traders are putting their stop losses here, and there is lots of money resting right here, and smart money knows exactly this. Now, let's say that the price wants to move down. So if they want to take the price down now, because they have been pumping this hard for a long time, and also they want to buy now this at a discounted price. So they don't want to buy it here at the top, they would like to buy it somewhere here, or maybe they would like to buy it somewhere here, depending on where the imbalance is. We will discuss that later. But let's say they want to bring the price down, and here they will fill their bags, and after that they will push the price towards the upside. They will bring the price down here, they will hunt their stop losses, and then they will push the price up. Now, yes, retail traders are thinking that the price will drop, but smart money, what they do, they will not drop it, they will rather give another push up, taking up the stop losses that are resting right above the resistance, and then they will suddenly drop the market to the direction they want. So what they have done basically is they have taken out all the retail traders and they have actually moved the market to their direction. Now, why they do that? That is important to understand. For example, the market is moving up, the supply is reducing, everyone is buying, and you see that the supply is reducing, of course, and the demand is increasing definitely. Now, if someone wants to buy it at a discounted price, definitely there should be more supply in the market, and because the price is moving up, nobody is selling it, no one wants to sell it. So how would they make the public to sell? Of course they would make them to panic sell. Now, how they, or what are the different tricks they try to use when they want you to sell so that they can buy at a discounted price? Now remember, if someone wants to buy a huge amount, let's say these areas are definitely discounted areas, they would love to come here and buy here rather than buying here at the top. So they know that there are some people who have stop losses below this, right? This is how the retail traders do. They have this resistance and support. So for example, this will be resistance for them, right? Also this will be resistance for the retail trader, or a support, sorry. So this will be support, this will be support, also this will be support for a retail trader. So they know that these are the support areas. So where would a retail trader put their stop loss? Well, they will put it here. And what is stop loss? Basically a sell order. And these are definitely the discounted areas. They are not buying here at the top, rather they are buying some here, they are buying some here, they are buying some here. So what they would do, they will create some panic selling here. So people will start selling and they are buying, they will hunt all these stop losses. The retail traders will sell, smart money will buy, and eventually what you will see the price going up again, like so. So that's how smart money works. So they basically move the market to hunt the stop losses of the retail traders. That's why I don't like to trade the trend lines or the supports and resistance. In fact, when I see some supports and resistances being formed, I know that the price would move and hunt the stop losses. Let me show you some examples here. So a retail trader, they would draw a line that they call as a trend line, for example. So this would be the trend line. Some people draw it from the bodies of the candle, some people draw it from the wicks, whatever it is. More authentic is definitely from the wick. That's what I have heard from most of the retail traders who trade the resistances and support. And also, if you let's just go back further to give you the idea from both sides so that you can understand it better. So now if we see the price action right here, what you see here, well, there are people who are shorting it right here. Whenever the price touches this line, you can even take it to the wicks, whatever you want. So some people, like I said, they just draw it from the wicks, some just draw it from the candles. And if we draw a trend line down here where the price is creating again a trend line, something like this, so they call it a wedge. Those people who are shorting it, they will short it right when the price will touch this trend line. They will take a short position. Where will be the stop loss? Just above this trend line, the stop loss will rest there. Those people who are longing it here at the support, they would long it here whenever the price touches at the support. And where will be their stop loss? Just below this trend line. So stop loss is here, stop loss is here, stop loss is here, stop loss is here. So what the price will do, or what the smart money will do, let's just try to understand. So I will just play the next candle. So there you go, that quick move down, quick move up, a wick taken out, all these stop losses resting here. Then what we will see next, you will see next the move. So price came up, came down, so just creating another trend line. So maybe if a retail trader is looking at it right now, they will just move their trend lines. So they keep moving the trend lines, by the way. The price went up, down, and there you go. Now someone who is thinking this as a resistance, what they are thinking, they think that the price will be rejected, and in fact it was rejected a little bit. So someone who is trying to short it right here, they must have taken the short position thinking that the price is being rejected. You see that wick, there was a rejection, but very next moment they went up, taken out the stop losses, even they blew it, so that if someone who is who is even trading based on this trend line, this they think as a resistance, right? So some people trade the horizontal resistance as well, so they create this as a resistance. Now they got taken out as well, and after this, you see these wicks, the price just went up, and if you even take the higher level of this, that's where the stop losses will be, right? So if you take the higher point, even the wick went above this, just to take out all those stop losses of those retail traders who are trading thinking this as a resistance. So here is an example of Solana, and as you can see, we clearly have a resistance and support level. Some people like to draw it from the body, some people like to draw it from the candles, or some people just draw it wherever it suits. So I will just draw it here, maybe something like this. So we now know that those people who are trying to short it, they have their stop losses resting above this red line, and those people who are trying to long this green line, they have their stop losses resting below this green line, right? That's where the stop losses or the money will be. So let's play it and let's see how the price reacted actually. So the next candle, of course, they showed that they are rejecting off from this support level. They broke it, taken out those stop losses. Of course, those sellers or who are trying to short the market, they are out by now because this was very strong move towards the upside. Then they came back and they hunted these people as well. There you go. You see this huge long candle. They hunted these, and then once they have taken out everyone, they now moved the market towards the upside. So you will see this happening all the time, and the only thing is you need to understand that what will be the next move. Now what you can expect here, if we talk about the retail traders, right? If someone longed it here, someone longed here, of course there are people who longed here, so they are in the market, and what they see this trend line. This trend line, maybe let's just assume the possible trend lines. Now of course, if this is the trend line, where would be the stop losses? Below this line. If someone has longed here, of course they will be having stop losses below this trend line. If someone is holding this trend line or trading based on this, they will be having stop losses here below this trend line, right? So when the market moves up, they draw this trend line, they will put their stop loss or move their stop loss below here. And of course, if someone wants to buy, where they can buy at a discounted price, these are the sell stop losses. So when the price will come here, they can of course buy based on these stop losses. And let's go to a bigger chart so that we can quickly see the price action. So I will just play it. So there you go. There you go. You see that? So they are always hunting for the stop losses. They have been taken out. Now they will start drawing new trend lines. And what will be the new trend lines? Maybe this, right? It's already has been taken out, because if you take the price back here and you see this pump, you will of course see a very clear trend line here. So if I draw this even from the wick to wick and just play the price, you will see that they have been taken out, right? So now if we try to understand that what we can expect next, well, I see here a couple of things. One thing is that this trend line being formed, and one thing is maybe this trend line being formed, and the price is here right now, right? If you look at Solana right now, let's just look at the price of Solana. We are at $140. So this is the latest price action. And now based on our discussion, what we know that there is liquidity resting here at the top of this trend line, right? A lot of liquidity. So there are lots and lots of stop losses here. So we know that this holds a lots of stop losses. We know there is a lot of money resting here. So if they want to make a temporary move up even, what would they like to do? They will like to take out them so that they sell them and they buy, they fill their bags, take these people out, right? Even if it's a temporary move, and then move the market further down. if they want to take the market to downward direction. So that's how smart money is always hunting the stop losses of retail trader, and that is why I do not trade based on supports and resistances.